Happy Saturday, everybody. Multifamily investors are getting crushed with rent rates dropping all over the United States. Here in Nashville, we just broke a 15-year record for the fastest pace for a rent drop in 15 years. This as vacancy hits a 20-year high. And guys, we've got more coming. This is putting major pressure on developers who have construction loans in 2020 and 2021, but it's also hitting another segment. Airbnb is getting hit by this. We see this with property management companies going out of business. And here in Nashville, there are some areas that have high concentration of Airbnbs, and we're seeing their rents drop. So even in the single family space, we're starting to see rents soften. But let's take a look at this headline here. Multifamily rents fall at the fastest pace in 15 years here in Nashville, with vacancies at a 20-year high. Rents drop by 2% in the third quarter. And guys, 2% in a quarter is just absolutely insane. It's if you annualize this, 8% a year. 11,000 units have opened their doors here year to date, but we've still got a whole nother load coming here next year. A perfect example of this is Alcove. Alcove right here, 900 Church Street. It has 122 units of a 350 unit available, which, by the way, Alcove is beautiful. I don't know if you see these pictures, but it is gorgeous. There's just one problem, guys. They're literally building a sister building right across the street that hasn't opened yet, that's got another 350, total 700 units between the two. And the biggest problem, they've got a $186 million loan. My best guess is that loan will be refinanced sometime in the middle of next year. And if it is, we're going to see a massive increase in interest. Do the math, guys. 6.5% on 186 million is 12 million. You divide that by 700 units and you're getting $17,000 per unit or $1,400 a month. But that's if they're all filled, guys. They're going to have to service this debt whether or not they're fully occupied. And there is the problem. How are you going to spread $12 million over two apartment buildings that are going to be 50 to 70% occupied for the next 2 years? It's just, it's going to be 2026. Are they going to be able to do it? I don't know, but it's not the only one. Check this out, guys. This is Madura Gulch. Madura has 378 units and 172 they're saying are up for rent right now. Now, the big problem with this is, guys, is look at their debt. They've got $83 million that they borrowed in December of 2020. So again, take that $83 million and we're just going to do simple interest here. What's 83 million times 0.065? We get 5.4 million. Divide that by 378 units, $14,000 in interest expense per unit. And that's if they were all full, it would be about $1,200 per unit. That's the problem, guys. I just don't see how the math works on this. Now, I don't know the models here. I don't know if they have something else going on or plan B, or if that retail is going to rescue them. But what I can tell you is this looks so bad. And guys, again, look at what's for rent right now. If you look at what's for rent, there are luxury apartments everywhere and for less. And these are nice units. So you can see they're competing with Harlow, 1387 with 3 months free. Okay. Look at that. 1387 with 3 months free. I am shocked. Now I know that's only one, but 1387 with 3 months free. I would love to know if that, it says on select homes. I doubt that comes with that. That is shocking. Now I suspect they did that just to catch people's eyes like they did mine. Look at that, 1387 for Harlow. Harlow's been running $1,800 a month forever, and then they just started dropping their price. My point is Madura is going to have a very hard time renting these out, and they are not going to get fully occupied. They're probably not going to be fully occupied till 2025 at the earliest. So I doubt they'll get them all rented out next year, but we'll see. I don't have superpowers. I don't know what's going to happen, but it doesn't look good to me. And man, oh man, they've got competition. Albion, Harlow, guys, it's getting bad out there. Now, let me read a letter that I got from one of my friends. This is just absolutely unbelievable. He invested in a syndication. They just couldn't overcome borrowing costs. And this is what they said: we couldn't stave off the lender's concerns, And without serious concessions by the lender, the operator simply ran out of options and listed the property for sale. Unfortunately, these confluence of events led to a total loss of equity in the project. Now, my friend lost all the investment that he put into this project, because this stuff is happening over and over and over and over again. So even though you see great Class A properties that look like they're crushing it, just know that there's a massive debt wall and refinancing wall that they're struggling with, and it's going to have to materialize itself at some point. At this point, I don't know of any major foreclosures or defaults here in Nashville yet, but what I can tell you is that the repricing and the cap rates have expanded without defaults and foreclosures yet. But guys, it's getting bad out there. Now, as I said, rents are falling everywhere. Look at this. Phoenix dropping, Dallas-Fort Worth dropping, Baltimore dropping, fastest drop in 15 years as vacancy hits a 6-year high in Baltimore. What in the world? Even in Charlotte and Raleigh. Guys, these are popular places. Charlotte, Raleigh is very popular. New supply causes vacancy to rise despite high demand at both markets, and it reaches record levels of vacancy in Charlotte and Raleigh. That is just wild. San Francisco, rents continue to decline. I don't know how. It just seems like their prices are going to be a disaster there. San Francisco got huge problems. Now, even this is CoStar's by market. They've got their rent changes. And even on the plus side, you see New York. However, let me show you this tweet by Jay Parsons. A leading local source is saying that New York City rents are falling sharply. Let's take a look at what he highlighted here. Median rents dropped for the 4th straight month, according to BizNow. A median price on a Manhattan rental from $4,200 down by 3.6% from September and 4.6% compared to October. We're starting to see rents drop everywhere. Now, I can't believe it took this long, but let's look at single family for a second. Lance Lambert tweeted this: Airbnb-backed short-term rental operator Zeus reportedly shutting down. Are we starting to see problems in single family? Now, when we look at Airbnbs, the average revenue is down 10%, and their rates are down 4% for the past year. And you can see even occupancy is down 2%. So we've got major problems in the Airbnb market. Now, how does this manifest itself? Well, one area that's been popular to Airbnb has been the Nations in Charlotte Park. Well, when I look, now this is the median lease price per month per square foot in Charlotte Park. You can see a lot of weakness here. 4 out of 5 of the last closed houses closed below, by the way, single family home closed below this median line. And this median line is already below anything of where it was in 2022, 2023. Guys, we are starting to see major weakness in Charlotte Park. Rent rates, these are 12-month leases, not Airbnbs. Okay, so we're seeing Airbnb starting to weaken. Now we're starting to see 12-month rent rates weaken in peripheral downtown single families. This is not happening everywhere. In fact, I spot checked a lot of places. Spring Hill is also starting to drop, in my opinion, and there's a ton of rentals down there. So I think that's somewhat of a weak area. I would say that's more temporary. I think Charlotte Park is the biggest risk. Interestingly enough, a lot of other areas have been extremely strong, like West Haven, and you can see rent has been incredibly strong here, even as rents just completely are so much cheaper than buying in West Haven. You can see very much strong rental growth, which kind of surprised me, if I'm being honest. Brentwood, if you don't know where Brentwood is just south of Nashville, Williamson County, mostly in Williamson County. And you can see here, it's just kind of holding its own. We can see it's topped. It's very seasonal, but it does look like it's picking up. One other thing that I think you need to see are some properties that are selling for less than what they sold for previously. Look at this one, $2.5 million in May of 23, now down to 2.2. Oh, that's the listing. November of 22, sold for 2.5. Now it's 2.25. This is your chance. Instant equity. Oh my gosh. I love this stuff. 2.961. Look when it sold last. It sold in 2021 for $3 million, guys. This you can buy right now for less than it sold in 2021. That neighborhood, it's just north of Battleground Academy. One other one, there's a $4 million. This one right here. Look at this $4 million one. 3104 Woodlawn. And you can see this one. If we go down to when it sold last, by the way, look at what it listed for. Originally listed for 4.6 in June. Now it's down below 4. And look at that. A little over a year ago, it sold for 4.1. Now it's at 399, guys. You can pick up a house for less than it sold for a year ago and $600,000 less. Hope you guys have a great day, and I'll see you next Saturday.